Everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be asking Steve about keeping a long-term perspective with investing in the stock market. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. So Steve, I've heard you talk on several occasions about keeping a long-term perspective in investing. Can you explain what you mean by that?
Sure, and good morning. Thank you, Allison, and good morning, everyone. We'll get pulled up here on the camera. Hey, thanks for tuning in again. We had some sound issues yesterday, so we're working through those. So bear with us while we learn a little bit more. Okay, as far as the long-term investing perspective is, I want to pull up a screen for you. It's so important that you keep this in mind. So let me share out the long-term chart of the S&P 500. We take a look at this, and whenever I talk to a client about long-term investing, this is what I show them is, a one-year chart, because it's really informative that when you keep the long-term perspective. So you look at where the market is now, and we're sitting here and the market's in the green this morning, so 430 on the S&P 500. If we had gone back a year ago and said, okay, the market's here and now the market's higher, everybody would be fine. If the market had dipped all the way for like 9 months and then came roaring into the 430, everybody would be happy and think that the market's the greatest ever, right? However, when you take a path, oftentimes it's a journey in investing that people get wrapped around, where we went all the way up here to this 480 level and then dropped down. Now it's like the world is ending, right? So, and really nothing changes. A year ago, we were at a certain point, we're higher now. And that's how you kind of keep things into perspective is, look, long-term, if you need to back out to look at 3 years, 5 years, 20 years, as a long-term investor, you certainly are making money over the long term, even though we're going to have what I call these rain showers in paradise, if you will. So the easiest way to keep that in perspective is kind of think back, okay, the market's right here this morning. The last time we were here was 3 months ago. Were you freaking out 3 months ago about your financial situation? Well, not much has changed, right? So probably not. So don't freak out now because you're going back in time to where you were financially 3 months ago. That doesn't make sense, right? And the time before that was back here in July. Where you were in July. Now, I will say there is, if you've come into new money, or there's some situations where you have maybe an inheritance or a divorce or something where you have a whole bunch of money coming in and you bought in here, then yes, I can understand why you're very concerned. But when you think of a long-term perspective, it's going to go higher, eventually. We will may be back to new highs, whether that's in 2 months or 2 years, you don't know with investing, but take advantage of these dips that you have to buy. When you think of historically, when has the market crashed? 2001, we had the tech crash. So did people take advantage of that? Sure. You bought a whole bunch of good tech names after they crashed, right? We're seeing a mini tech crash now. We'll talk about that a minute in the later question. But we had 2007 through 2009. If you invested through that and bought more shares during that time, you were good to go. In 2015, when the Fed started raising rates coming out, like we talked about yesterday, out of 2007, 2009 timeframe, 6 years later, we started trying to raise rates. We couldn't. Market dipped. There's a buying opportunity. December 2018 went down 19% a month, buying opportunity. And March 2020 was the buying opportunity of the decade, right? That 35% in a month, everything went on sale. So when you think of keeping things in a long-term perspective, these are bargains to acquire stocks that you're going to hold over the long run. So stick with quality and just realize that this is going to happen again. So you don't want markets to go straight up, because if they do, they'll crash. So if you want them to go up and take these stair steps every now and then to reset values, then the market can set the footing for going higher. So excuse me, that's how you keep a long-term perspective in investing.
So for today, we have the Federal Reserve announcement at 2 p.m. Eastern, and then Chairman Powell speaking at 2:30 p.m. What do you expect the Fed to do today?
Okay, certainly this is the market event of the day, is what's going on with the Fed. And a lot of this, like we talked yesterday, gets priced in, right? So the Fed has been, 3 weeks ago when they released their minutes from their last meeting, they said they priced in 3 rate hikes this year. So what did the market do for the past 3 weeks? Has kind of sold off. So it's really priced that in. So one of 2 things will happen today is they will either announce a rate hike or they won't. I don't think there's any way that they're gonna, no, I can't say any way. I think there's a very small percent chance that they raise rates today, but for the most part, they're just gonna stick with the course. They're gonna not raise rates, but they're gonna keep their hawkish tone. And when you're a hawkish tone, that means they're probably still forecasting, 3 rate hikes this year. With the contentious midterm elections coming up, I don't really see it happening, but I think that's what they're going to say. So how will the market react? I think we're going to see a nice green day into the market. And then when they don't raise rates, we're going to continue to kind of bounce in an upward fashion from, this big sell-off we've had of the 12% in tech. So I think things will naturally kind of, continue higher from the big sell-off we've had. But ultimately, no, I do not think they are going to raise rates today at the Federal Reserve meeting.
Last question. Earnings season is in full swing. Any names you like going into or coming out of earnings?
Sure. Microsoft released last night. So again, you're looking at cnbc.com. So let me just pull up Microsoft here real quick. So this is the bounce that you see. And this is kind of instructive too, down here at the bottom, is you see Microsoft right at earnings. This was the close yesterday. So it's down 2.66% yesterday to this point. And then right after earnings, generally it's a few minutes after the market close, is when they released their earnings. And the stock took a hit, another 2.5% or so. And this is why it's instructive to keep a long-term perspective. If you liked Microsoft at 290, and I bought a bunch of Microsoft yesterday going into earnings, and it fell, I'm not phased at all, because you know what? It was a great quarter. They just need time to process that. So as overnight happened, the stock started to recover, and now we're at 5% just before the market opened going in today. And I think the name continues higher. Boeing is another name out there that is interesting. They just had their earnings this morning. You can see they're up 1.5%. They've sold, if we back this chart out to a 6-month chart, Boeing's had its issues. It's had issues with airlines. But Boeing is still one of the best ones out there, as far as there's 2 ways to win, right? You have exposure to the airline industry, where they always continuing to get new orders, and you have exposure to the defense industry. And the defense stocks look attractive right now because you have Russia potentially invading the Ukraine, and the United States, getting involved maybe to some extent or a lot, we don't know. But there's a lot of attractiveness in the defense names, which I like that. We have Tesla coming up as far as earnings that we're going to have tonight. And then, of course, the big one tomorrow is Apple. And I think Apple's going to crush earnings and the stock is going to scream higher. So I'm very excited for the opportunity in Apple in the next couple of days.
Thank you, Steve, for your commentary and analysis. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.